What am I paying? How are you making money? In today's environment, these are very common questions. Fees on investing have been put in the spotlight, which there's far more transparency in comparison to years past. Now that fees are at the forefront of the discussion, we're also seeing a decompression of those fees, in which companies are competing to be the lowest cost of investing. Now, we believe that fees truly only matter when there's an absence of value. Now, this has to be within reason, of course, but since the fees you are paying are going to be taken from your overall total return, we believe there has to be some sort of value that is provided to offset that lack of return. Now, there are a lot of fees on investments that are not easily seen on your investment statements. Let's look at retirement plans or 401ks, for example. If you look at your investments within the plan, you'll see internal mutual fund costs that vary depending on a number of different factors. Outside of 401ks, there are many different types of investment options. Mutual funds, for example, have many different types of share classes. A shares, which is one of them, charges an upfront load and then an ongoing fee, which means you'll have to pay a certain cost to get into the mutual fund up front. C shares, which is another type of share class, typically has a bigger range and a completely different fee structure than A shares. Outside of share classes, you have individual stocks and bonds, which don't have internal costs like mutual funds do. However, they do have trading costs, which is the fee you'd have to pay to actually buy or sell the stock or bond. Now, looking deeper into different types of investment vehicles like a variable annuity, for example, we often see annual costs ranging over 3%, which means you'll pay a certain percentage that shaves off your overall performance. ETFs are similar to mutual funds, however, they track a specific index, which is less expensive than active management. The trade-off for these inexpensive fees is lack of diversification and maybe not as upside in the rate of return that you can receive. So taking in consideration all of those fees, you then add the advisory fee, which is the fee you'll actually pay the financial advisor. Now, this can range drastically depending on how much you have invested with the advisor, if they're doing financial planning, and a number of different factors. Some financial advisors even have a third-party money manager, which could add an additional layer of cost to your advisory fee. So, when you take all of that into consideration, you might be paying the financial advisor, a third-party money manager, and then any of those internal costs that we had discussed. So what does all this mean? Even though the industry has taken a lot of steps to provide transparency for the investor on what they're paying, it is still very difficult to fully understand what you're paying in fees. Now, taking all the information we've discussed, the cheapest way to invest would be to do it yourself. Actually take the time to manage your own money. However, most people don't have the time nor the knowledge to do this effectively. So, going back to the advising fee, most financial advisors will charge a fee to mix up your investments and give you the exposure they want. Using their experience or judgment, they'll pick an investment strategy and serve your needs. However, does this mean they're actually providing you with value? And is rate of return the only metric to be used to measure value? So when you look at the fees on investing and consider whether or not it's worth it, there is a lot to consider. If you believe your situation is satisfactory, then the fees might be worth it. However, regardless of if you think you're getting value in your situation or not, it's time for you to fully understand what you're paying in fees on your investments. Ask your advisor to show you the fees. If they have done their job properly, there won't be any surprises. And if there are, you can address them effectively. Thank you.